Hey, ladies and gentlemen, I'm going to show you my six-figure dividend portfolio. Today is being affected by the Canadian dollar, gold, and oil as well. We're going to head on over to my Scotia iTrade trading platform account, and I'm going to break some stuff down for you guys today. So let's just get on over there and jump right into it. Welcome back, passive income investors alike, as we take a look at the two portfolios today. There's been some major fluctuations. At the end of yesterday, I was sitting up, again, all-time highs. I was right around $113,000, $500, give or take. And then all of a sudden this morning I woke up and my account was back to $112,500. So it's like all my dreams were just taken away. And I was like, why? What is going on with the account today, guys? Sorry, I'm just rolling out of bed, so I might be a little quirky. And again, not that I care about the actual equity gain that much, considering this is a dividend portfolio. But we'll take a quick peek at the biggest movers today and exactly what's going on. So before we get into this, the gold, silver, and oil stuff, we'll just take a quick peek at the account just to see what's going on today. And we can see the utilities have just been, again, killing it lately. They've just been on the run, along with Microsoft, which continues to hit all-time highs even today as well. Maybe we take a quick look at the chart on Microsoft, because this thing has just been on the run lately, guys. It's been quite a wild run for this guy. And I could imagine a pullback's coming pretty soon on this one. I think it's going to get overstretched here soon, or overbought. And then we got GEO Group. We got Canadian Imperial Bank, which has been my worst performer, but it's also been coming back slowly but surely. And then Apple, which has been slowly trying to get over that $200 mark. And in the other account with the stocks I've just been buying, like British American Tobacco, we can see that I was in the green yesterday on these, and today I'm in the red. And I'm going to show you why I'm more in the red than I should be. Even though Tesla's still up where it is, I'm actually down more than I was. And this has to do strictly with that Canadian dollar, guys, because lately, in the last day, I want to show you how much the Canadian dollar has run. The Canadian dollar has run up, barely 0.75%. And you're probably thinking, oh, well, what does that matter? Well, on every single dollar, 2 or 3 cents makes a big difference when you're spending thousands. Big difference, guys. So if you're going to spend $100,000, you got to think, if it moves a cent on $100,000, it starts adding up, guys, pretty fast. And again, with how much the conversion is on the difference, because the FX rate is around we're at $1.37, I think. So for me to buy a US dollar, it costs about $1.37 Canadian. So when that actually moves, because my account has over 100,000 in it, and a good portion of that is in US, when the Canadian dollar goes up compared to the US, you'll see my US equities will just drop. And even though like MO and all that, if you go back, I swear, go back yesterday to when I was talking and showing my portfolio, and you'll see, even though MO was at the same price it is today, I was actually in the green on my equity on it. And you can see how that little bit of fluctuation in the dollar can really screw with your account. But it's something that I'm always paying attention to, and I always come to the realization that if this ever skyrocketed up, I'd be getting good deals, but my account would take a bit of a ding. Which takes me to gold. I don't know what's been going on with gold, oil. There's been a lot of talks around this lately, guys. Gold in Canadian dollars is hitting all-time highs for the first time since 2012, which is a fun statement to say, because everyone's all about gold lately, but it's one of the slowest. It just beats inflation. I'm not the biggest fan of gold here, guys. Even though I used to own a ton of it. The first channel I ever posted was me selling off a lot of my gold. But in Canadian dollars, it's been doing better, considering in US it still hasn't hit all-time highs. So we're still waiting to see the return to all-time highs in the USDs when it comes to gold. And a lot of people are saying this has to do with some of the stuff going on with Iran and Trump right now. What is this one? Yeah, the Trump and Iran made a very big mistake, because apparently they shot down one of their drones. This is a wild thing to talk about, by the way. I think it's crazy when you start talking about countries shooting down planes, and well, the good thing nobody was on this plane, but still, it's not a small thing to be shooting out of the sky. And it's causing some issues and some, scare tactics and things like that. No one really knows what's going on, which is usually what causes the gold price to shoot up. But it's also causing some fluctuations in oil, because we got to remember there was that unprovoked attack on the oil. That oil tanker, guys, when somebody blew up some of these oil tankers, which we can see here, shooting allows attacks on 6 tankers in the region, which caused oil to spike up huge. And you think a lot of this is manipulation, like the country's doing this on purpose to try and manipulate gold higher. We keep forgetting that most of the world is based on oil. And it's something that a lot of people don't pay attention to, but they have to understand that their entire economic function revolves usually around oil, especially when you get into Iran and a lot of the Middle Eastern countries where they have some of the largest oil reserves on the planet. So it's something to definitely take a look at. It's not something that I recommend you overanalyze, especially now. The best thing about life is the fact that electric cars are coming into play, because, man, if you go to the pumps like I have, and you literally, one day I was paying $1 for gas and then like 99 cents a liter, and then all of a sudden it goes up to like $1.30 and you're paying 30% more for gas, which takes your $60 tank to fill up to $80. It's really annoying and frustrating. So if we just head on over to the old stock twits here, guys. A lot of people have been asking me what I use to follow stocks, and I do use this platform. It's not a good thing to follow like exactly what's going on with stocks, but you just see the stock price and what people generally think about it. And if we head on over to the Vanguard or the SPY, usually this is where you're going to see a lot of people talking about some of the things going on, which is how we feeling about the resistance we're going to hit. So, some bearish opinions are going to start coming in now as, again, things have been rallying pretty hard. Stocks head toward record highs as the Fed does rate cuts. Still in my longs on the SPX, add long positions. I posted a thing on here a little while ago. You guys can follow me here as well if you'd like. I'm a passive income investor. You can see my same little weird photo with the sunglasses with the mustachio on it. But let's just take a quick peek at SPY here real quick as well. Let's scroll on over into the SPY and see what people are saying. It's having a really hard time breaking these fib levels. I hate Fibonacci, guys. I'm not a fan of the Fibonacci levels. If you don't know what those are, they're just technical charts and fundamentals used to try and gauge whether a stock's going to go up or down. But don't use them. I'm not a fan of them. They're kind of inaccurate a lot of the time. Just waiting for dumpster fire, blah, 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 blah. Booyah! Reversal now confirmed. This is usually what you get, is the back and forth opinions of people saying, oh, this is a good thing, bad thing, good thing, bad thing. There's just because the Fed talked yesterday. I was Jay Powell or whatever, the guy from the Federal Reserve, and he wasn't going to raise interest rates, and he's talking about how he's actually been enjoying this economical cycle of growth, and they want to try and sustain it as much as possible because growth is good for the economy. It's good for people like you and me, and it keeps everything on trucking. But yeah, guys, as I scroll through here, like I said, I'm just shocked when I woke up this morning. I had hardly any reds. Like, there's no reds in here. Look at this. We got green, 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 green. Tesla's down $5. Whoop-de-doo. I don't own enough of it to make a difference. We got BMO down 2 cents. Everything else is in the green, guys, in my portfolio specifically. But all of these stocks, there's so much green today. But when I go into the accounts, I'm almost down $1,000 just because of the Canadian dollar going up like just over a penny, whatever. It's kind of funny when you look at how that works. But like I said, it's something to pay attention to. And yeah, I'm glad I picked up some shares yesterday at BTI. It seems like a lot of you guys enjoyed that video. And my dividends are currently, again, sitting around almost $4,800, which I'm going to self-high five here because I think I deserve it, as this isn't easy to pull off. But now the problem I'm having is taxes. Do you guys know anything about a foreign income tax? The issue that I'm currently having is that all the money that sits in this account, as I keep piling cash in here, I have to pay the tax on that. And last year, I ended up paying about $10,000 in taxes, which wasn't terrible. But because I work for myself and I'm able to funnel money around in a lot of different businesses and stuff, like, it bothers me that I had to pay any tax at all. And I realized that if this year's going to be the same as last year, I end up paying $10,000, and the next year's the same as the year before. And there you go. I've spent $30,000 on taxes. And because I work for myself, I come to the conclusion that, you know what, maybe I should just buy a property and put money into the property so I don't have to pay taxes, and then I can defer the tax into the property. And the problem I'm having is property in Canada costs an arm and a leg. It is extremely expensive to get into, but in the US right now, properties aren't as expensive as U.S. citizens seem to think. When I'm looking at properties in the U.S. that are worth $200,000, a lot of people seem to think that's expensive. But compared to Canada, where a condo cost $500,000 in Canadian dollars, when you're looking at properties and condos in the U.S. in like Las Vegas core for $200,000 or $100,000, or in Florida for $100,000, like, that's cheap to me. And the return rates and the cash flow are 6 to 8%. Like, it's not bad. So I'm trying to figure out what I can do to maybe take all of these positions and liquidate them into a property. And a lot of you are saying, oh, yeah, but what about your dividends? What are you going to do? Well, I'm still going to be getting the same cash flow, which is goal number one. So long as I can get the cash flow, if I can save myself from paying the government $30,000 to $50,000 over the next 5 years, that would be ideal as well. And then on top of that, I could have a property outside of the country, which would be really nice. Because here I'd have to liquidate my entire portfolio to even buy a property. And because I've paid the tax and I have a lot of money in this account, in my tax-free savings account, I don't want to touch this as much as possible. But I don't want to be building this account over the next 3 years, having to pay tax on it all along the way. It kind of is annoying to me. So what I would like ideally to see is for me to be able to buy a property, and I'd come up with, $40,000 to $50,000 down. I'd liquidate all of this, and what I would essentially do is go into my tax-free savings account, and I would leverage down in Apple, probably a Canadian Imperial Bank and Northland Power, and I just scale those down a little bit, and I'd repurchase some positions in these companies because I don't want to get rid of these companies. So I would just try and do that to rebalance the portfolio. And then I'd also be able to add real estate that would be cash flowing as well. But I'd love to hear what you guys think about all this in the comment section below. A lot to go over today. I hope you guys enjoyed it. Stay cool. Stay awesome. I look forward to chatting to you real soon.